Jim, Knight has a $440 million loss, supposedly, from the trading error that they had yesterday at the stock exchange. Some analysts are saying that this is it. It's going to make the company bankrupt. Can they recover from this?
Tommy Joyce, the CEO, is a remarkable guy. Very honest, very forthright, obviously put out this data as quickly as possible. I think that they immediately said they need capital, and they're going to try to raise some capital. As long as the trading partners stick with them, they can make it. I don't have access to whether the trading partners are shying away or not. I didn't know that the company had this level of risk. Obviously, others didn't either because it's come down so much. This is now binary. I mean, you could buy a $3 call on Tommy Joyce, and whether people are going, I mean, that's what it really is. It's a $3 call on the company being able to raise capital or sell itself, perhaps at a small premium. But I think that the lesson of TJ's business, as everybody calls him in the business, is that the machines were more important than the men and women. And when the machines are more important and you can't trust the machines, you can wipe your business out. And that's what happened here.
Because you've been in the trading world. I've been in the trading world when there were humans making these trades, and you made mistakes because they happen when human. You can control them, and so the mistake didn't get out of control.
That's the point. You see, they couldn't shut it down. Right? You couldn't shut it down. It was all mass. It happened quicker than a blink of the eye. This is where we've gone. Now, that's Knight's business model. We're the fastest, right? We're the fastest. And Rick Santelli this morning, CNBC, I love Rick. He was talking about the dark pool. You can't swim in them, and Knight's been a dark pool participant. What I think is important here is that it speaks again to a business that I don't really care for right now, which is the brokerage business. It seems to have massive, massive risk. Particularly more than I ever thought today, and very little reward, and that's not the kind of stock. I mean, look at Morgan Stanley, which doesn't have obviously the Knight problem, but Morgan Stanley, Europe goes down, and Morgan Stanley goes down. I mean, Goldman can't really get out of its own way. If you want to spec on a 0 or 6, I guess that's what Knight is.
You know, I think the only good that came out of this was the stock exchange itself, the New York Stock Exchange. You know, I was over there by the Knight desk when it was happening, and the governors were on that like a cheap suit. They were on it so fast, and they were in charge, and they were, you know, I felt like they controlled some of the chaos.
The hybrid model. The hybrid model does work. It's just not that lucrative. And the machines are out of control. The SEC has been so pro-technology. They regard technology as progress.
Yes, they allow the high-frequency trading. They allow anything that's asked for.
We call that captured. They've been captured by the fastest and the most technological. And we see that the fastest and most technological can often be horrendous. This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to